Aloha, lads and gents. Welcome back to a new episode of A Sense of Capital Insights Time. Your host of today is Julian, as always, and I'm very glad to have you in again. In the upcoming minutes, we will again talk about the past 30 days, the past period of my personal investment portfolio. And as always, this is no financial advice or consultation whatsoever, and there's no guarantee for any correctness of the provided data. Okay, guys, let's go. Before we start right in, I can tell you already know we're talking about a truly exceptional update, an exceptional period of time when we talk about the past 30 days, not just because of the actual development of worldwide stocks and my stocks I'm holding, I'm a shareholder of, but as well about the activities which took place in my portfolio. On the first glance, you might ask yourself, what is Julian talking about? But as you can see here, just some regular purchases, $550 in 3 different ETFs located in the small cap sector, as I already announced in the former investment portfolio update, and even no investment in single stocks first time this year. But what makes this story so crazy is the second sheet of the activities. As you can see right now, I almost sold 2/3 of all my ETFs I was before a shareholder of. So basically all different 8 ETFs, I sold a small chunk or portion of it. And overall we're talking about roughly $33,000, which is quite some money. The background of this decision was not a strategical one, it was not some psychological one, some mental one, or just securing profits or whatever. Basically, my leverage level, my level of debt was so high, I want to make sure that I'm not running out of financial power and getting on a certain solid level, because honestly, I was covering an interest rate with $23,000 with roughly 8% interest rate, which I need to cover, which was from my side, from my perspective, too high positioned. And furthermore, I simply wanted to cash out a little bit money for private life, and therefore I was somehow forced to do this move. I'm not feeling any bad about this. I think the timing was quite right. I could profit out of the past development of the worldwide stocks prices, and therefore quite happy with it. And you will see right now how this looks in reality, what is left in my ETF budget. So that's the rest of the Schützenfest, as you would say it in German, just a German saying. Nothing too special, guys, and you need to worry about. As you can see, so I'm still a shareholder of the 8 mentioned ETFs, which are spread across 4 major regions: US, Europe, emerging markets, and Japan. But as you can see here, the overall value shrinked very, very heavily to $13,860. However, the monthly yield was great with 6.1%. So double thumbs up. Finally, a good experience. I'm used to bad news, let's say it like this, as some others of you out there. But I think you can relate to this, that it's always great to have a positive experience, a positive month, a positive period. And luckily, we lived through this, or at least I lived through this in November. As you can see here on the lower chart, especially Europe and US took the lead when we talk about performing well. Emerging markets in Japan are still a little bit in the back. I hope they can catch up in the upcoming months. Not sure about this. However, I will keep my overall regional allocation, as you can see here. 34% US, 30% Europe, 30% emerging markets, and 6% Japan. I changed nothing about this. Now everything is in the green, perfectly aligned with the target ratio. And yeah, I'm quite satisfied with the setup and looking in the future when we talk about the ETF section. So the second part of this story, why this month was, in my opinion, an exceptional and truly exceptional one, is of course the performance of the different stocks worldwide, and as well luckily in my portfolio. As you can see here, nothing has changed. Still holding the 6 different stocks located in Netherlands, the US, Brazil and Israel. And as you can see here, the yield per month was epic, truly epic, with roughly 39% in the plus, in the green. Just crazy. I mean, as a single stock investor, you always somehow hoping for your speculation being successful. And of course, it simply feels great if this takes place as it happened in November. I'm crossing my fingers that it will go on in the December as well. And of course, a major reason is because the overall macroeconomical situation has changed a little bit. A lot of rumors and speculations are existing that the overall interest rates will go down earlier than expected in the upcoming year because inflation decreasing quicker than expected and assumed. So that's definitely the major driver and the kickoff for this rally, let's say it like this. But as you can see here, especially really the losers of the past months overtook their competitors just in the front. Alphen, which lost so heavily, just check out the two past Inside Time episodes. You will see that Alphen was beaten strongly and now taking the lead. Great, and very happy I could hold it. In a minute I will show you why this is the case. And almost funny and awkward, of course, the development of new bank, which is almost neutral. Why? Yeah, primarily because of, I think people are now taking profits. I will take on the next sheet a little bit of focus on the earnings results, and you will see very quickly that they didn't cross the guidance, the forecast so heavily. And this is what you get then, yeah? So Nubank in the past always on the winning side, this time more on the neutral side, definitely not a loser at all. I will keep it for sure, still convinced. Yeah, and let me show what are the actual detailed results which even boosted heavily the macro overall economic situation. I've decided to display you hopefully well structured the results of these 6 different shares I am holding currently. As you can see here, no red, no nothing negative or whatsoever, but honestly as well, from my side, from my opinion, there haven't been so strongly positive results. Yeah, it's nothing too epic, let's say it like this. Yeah, even if the performance with 39% is definitely exceptional, as I already mentioned, the single results of these stocks are quite fine, but I'm happy with quite fine because the valuation of all of these stocks is quite on a good level. In my opinion, a lot of them are quite cheap and still somehow underrated and room for improvement. When I talk about this, I mean especially Perion, I need to tell. New from my side, I think is valued on a solid level. I'm not 100% sure if I would now enter the business and invest cash into new holding, new bank, if I would be new to this stock. But when we talk, for instance, about Perion, the results have been quite well. Even if I rated it here in yellow color and neutral color, I'm quite convinced they have been very solid, but they are heavily affected by an exclusive Microsoft deal and agreement. And this frame agreement gets prolongated in the upcoming year, I think end of upcoming year, beginning of 2025. And so that's somehow a risk, and still they're having a lot of money, I think roughly $500 million US, which they originally acquired for somehow soaking in a new company, but it never took place. So however, they have still financial strong power. I'm very confident they will extend their agreement with Microsoft as a search engine provider, and so advertisement will go on. And especially when the demand of the overall market in terms of advertisement and marketing power is getting back on track, for me, Perion is a great bet, honestly. So that's definitely my secret advice I can give you here, to take a stronger look on Perion. Definitely something which we should keep on the radar. News a little bit neutral for me. But what was really great when we talk about earnings results, Alphen, nobody expected that Alphen, or most of the market didn't expect that Alphen will perform, and they performed great. So they had an all-time high revenue quarter with roughly $150 million US dollars, and please don't nail me on this. I tried to calculate it. I'm not 100% sure, but I guess it is an earnings per share of $1.07. So that was just crazy. And right after, the price raised very strongly. You can see it as well if you take a look at the chart. So Alphen was definitely something positive and surprising. And as well, when we talk about StoneCo, I mean, honestly, I don't have too much doubt about this company. It's ranked on the second position after Hims & Hers when I talk about my single stocks, about my favorites. And I communicated it quite live and guided it at the stream. And just when you take a look at all of the different numbers, I mean, software business could be a little bit improved heavier in my opinion, yeah, but this is something which needs time and they are working on, and it's more relevant when we talk about the larger key accounts of StoneCo. So that working with larger key accounts, everyone who's experienced with this, they know the overall decision processes, etc., and implementation processes taking more time. However, when we talk about the MSMB, the micro, small, medium business market, which is focusing StoneCo very heavy on, is going so well. They have so much potential left. We will see later in the news section what I'm talking about in numbers. So that's great as well. Hims & Hers is neutral because, in my opinion, as you can see here, forecast EPS just in line, not too special. The revenue was not covered so strongly with roughly 6-7 million US dollars. It's okay, not too crazy. And still the marketing expenditure level is quite high compared to the revenue. However, they just launched their weight loss products and I'm hoping for the best over here. Just maybe coming back to Perion, they mentioned as well they will launch an AI solution which is called Wave. So it's basically a digital audio driven advertisement which is created on demand, which can you use, for instance, for podcasts or radio commercials. So something quite crazy. I'm not the promoter of them, don't have an exclusive agreement with them whatsoever, no cooperation existing, but check it out. Maybe you're interested in it. I think it's quite interesting. Don't know actually what will be the financial potential which results out of it, but just when you hear it and you think about it as someone who could be in the audience and listen to it, I think that sounds quite interesting and great. And last but not least, in the semiconductor provider for the automotive sector, actually just a great quarter result. For many of you, maybe it's even a positive one. For me, just a neutral one, because I want to be hard here and tough and very strict, and it needs to be very positive to get my positive ASOC rating. And for me, it's just neutral. But what is great, their guidance. So they told that they will come, when we talk about the EPS level, on a neutral level, which is definitely a strong move. And furthermore, they will reach the guidance of the year. They will reach over, I think, more than 70 million US dollars for the next quarter. That's for sure exceptional. And of course, the market is taking it seriously and investing money into this stock, which is definitely, from my perspective, one of the better ones for sure. And that's the reason why I definitely will keep it. Okay, guys, let's jump a little bit more further and getting a little bit more detailed when we talk about several news of the different single stocks. So first news belongs to Hims & Hers, the pole position when we talk about the ranked stocks I'm owning. And next to the products they already launched, the weight loss section. And let's see what kind of revenue development will result out of it. In the earnings call, they mentioned on average roughly 1.5 years it takes till a new product really hits in and has a strong and impactful effect on the overall revenue results. Let's see how, in this regard, the weight loss products will develop. However, they launched as well something else, and they introduced MedMatch. So they are very innovative, and of course they want to bring as well like Perion and drop a wording which is AI, artificial intelligence, the 2 words of the century. You can think about it. Let's see if that's really the case, and the reality will be this in the future. However, so they have a solution as well. They talking about even more customized treatments, and they will launch the solution based on the database for the product section anxiety and depressions, and if it's successful, roll it out further in the future. Yeah, so a great diagnostic service, at least I can think about. Let's see how the customer base is welcoming it. You never know, even if it sounds great, if that will be great. Let's see what the future brings here. And another news of Hims & Hers, I just want to state that for me it doesn't have too much impact, honestly. They announced a 50 million share repurchase program. You never know what is the reason for this. Maybe we're talking about stock-based compensation for the staff. And so it's not too crucial, let's say it like this. Yeah, not too essential. And actually I'm not even recognizing it too strongly, but however, they mentioned it on their website in the news section, and I wanted to keep you updated here as well. That's the reason why it is stated on a separate sheet. Okay, let's go on with as well not too crucial news from Perion. So they already announced new CEO Tal Jacobson, I hope I pronounced the name correctly, is now finally welcomed to the board of directors. So the former CEO Doran Gerstel, which really performed so great and achieved what is today the company Perion Networks basically. So hands down when we talk about him. He is leaving the board of directors, and now Tal Jacobson is completely introduced and integrated and involved, and I'm quite confident. As I stated earlier, this very important exclusive deal with Microsoft, originally, I think he was involved very heavily as well when we're talking about fixating this deal. And so now he's the CEO, and I'm very confident they will sign this agreement again. And Perion was awarded from Microsoft as one of special suppliers or cooperation companies, whatever. So it's not like I think bad blood is existing or something like this. So I'm quite confident this deal will get fixated, and I'm confident as well as soon as deals fixated, maybe as soon as the advertisement demand increases and getting higher, even if Perion already proved they can work very successfully in every period of time in the past years. It will get better when we talk about the stock price, and latest when the third aspect hits, which is in my opinion a potential acquisition of another company. As I mentioned, they working with a huge budget of roughly 500 million US dollars, huge especially compared to the company value. If they acquiring really a new company, or they investing somehow efficient and successful, then definitely there will be some kind of a strong breakout. I'm very confident about this. So 3 aspects: Microsoft deal, second one is overall total advertisement demand, and the third one is the utilization of the existing cash position of Perion. All of these 3 factors can hit hard and strongly and definitely have a great positive impact on the pricing of Perion. And I'm very confident that Tal Jacobson can make the transition of Doran Gerstel period to the future to a success story. Okay, let's go on with another news, and these are addressed to StoneCo, Stoneyear. So I already mentioned in the past month, in the past period, in the past update, that they announced a stock repurchase program which was roughly about 60 million US dollars, and as you can see here stated in the news, they already executed it and purchased the stocks for, compared to now, cheap price, which is $10.30. And now they already announced another repurchase program of another, and this time roughly 200 million US dollars, which is 1 billion Brazilian reals. So roughly 3 to 4 times the size of the last announced repurchase program. So great news. As I mentioned, for me this company is a cash machine. Of course, the revenue development will get a little bit lower and decreasing, getting more to a regular level of roughly 10-15%, but it is a cash machine, yeah. So now they realize the potential and shifting to profit, and definitely a lot of potential left here. And I'm quite confident here as well that we will see more and more news like this. I hope they will keep on purchasing shares as long as they think they are cheaper than they should be, and when they evaluate by themselves that the price is quite cheap, yeah, based on their assumptions, their calculations, I'm very happy that that's the case, because I'm sharing this opinion, and as long as you are a shareholder, you're somehow profiting based on this estimation. And even more news to StoneCo, 2 more news actually, and this is one with a larger impact. And as you can see here on their Investors Day, which I think took place in the mid of November, 15th of November, they announced their mid and long-term guidance for 2024 for the upcoming business year, and as well for the next 3 years, so 2027. And as you can see here, I hope it's large enough, the numbers, but I can tell you, as you can see, MSMB total payment value, okay, 30% CAGR is fine, it's okay. Client deposits, 26%, already great, yeah. But now it's getting crazy somehow, yeah. Credit portfolio, what is going on here, guys? So, I mean, 0.8 billion real in 2024 in the upcoming year, and then 1 year later, 5.5 billion Brazilian real. Crazy. I hope they can monetize it on the right way, and I'm quite confident they can, because they proved it in the past quarters. They are on track and heading into the right direction. Take rate stays quite solid and even getting a little bit better, fine as well. And again, strong aspect, 31% development up of the adjusted net income, especially when you see in one row down in the text fields, in the boxes, the administrative expenses staying more or less constant with 9% increasement. So that is when I'm talking about StoneCo is a cash machine. And as I mentioned, new holdings, new bank, maybe I would not invest right now and just stay on the sideline and watching it with a little bit distance, yeah. If you're already invested, I think the story go on. I mean, for me, it's about monster in the making, no doubt about it. But however, I think there are better opportunities in the investment market. But when we talk about StoneCo, even if the price already raised very strongly in the past weeks, especially in the last days, I still think it's a great catch, a lot of potential left. It's not on the map, not on the radar of so many investors, especially the, let's say, it average Joe, no disrespect, but the average Joe in the Western world maybe doesn't look too focused on Latin America, on Brazil, on StoneCo, on a small cap over there, and I understand why. But still, I think you can be one of the more early adopters. If you're not invested right now, make your due diligence and do your own evaluation. But I think it's definitely worth to spend some time and maybe invest in StoneCo. And last news, and again addressed to StoneCo, as you can see here, the Bank of America raised the rating of StoneCo to buy. So I think Latin America overall, of course, because of the decreasement of interest rates, yeah, getting lower, and the business getting on fire in a positive way again. New already received a ranking raisement in, I think, last month or the period before. But now StoneCo experienced this as well. And so the Bank of America expects even greater results and over average development. So I hope they are right, because then, guys, we are right as well. And yeah, very happy to be a shareholder. That is all I can say here about, as I already mentioned in the past earnings stream. Guys, if you have time, if you are interested, I always try to cover and guide the earnings results of each period. So next time, if you have time, I always announce on the day of the release if I will stream or not. But if you have the chance and you're interested, take the chance and join. I always appreciate every one of you who's joining, and more people means for me more fun and yeah, always looking forward to welcome more people to the streams. Here you see the summary of the current status of the stocks I'm holding. So even though I sold approximately 33,000 US dollars, the overall total value of the portfolio just decreased by roughly 10,000 US dollars. So 1 month ago I was holding roughly 86,000 US dollars on shares, and now I'm still holding 76,000 US dollars on shares. And the ratio between ETFs and single stocks shifted as well very heavily. You can see it on the top left on the table or on top right on the chart. No matter if you are a more quantitative and content focused person or a visual one, you can see on the top right side the violet line increased and go up very heavily. These are my single stocks, and the golden one are the ETFs, and it dropped heavily. The violet one increased heavily because of the overall development and people purchasing the shares, and the golden one dropped just because of I've sold. However, feeling very well with the balance. My ETFs, for me, it's like having cash 2.0. So monthly when I get my paycheck, I can always take a part of it, invest it. I don't want to drop it on my bank account. I can just invest it in ETFs. I know it's somehow working, and I'm invested in the market, and as soon as I need money, as I did it now a few days ago, I just sell a part of it and I'm still fine. Okay, there are some costs for the services, whatever, when I sell those stocks over my broker, but still, it's for me it's a great procedure, and I can live with this very well. But of course, each on their own, everyone has his own strategy how he's working, and some people very likely prefer to just get the paycheck and the money they don't want to invest right now, keep it on the bank account. Fine, of course. But as you can see, roughly 18% invested in ETFs. When you would ask me, I would love to increase this a little bit at least, and I will do this, of course, in the upcoming months. Of course, I don't know what will happen with the market, yeah. So if the single stocks increasing and getting more and more tailwind with my loan, it's difficult to work against this, and I can live with this difficulty, honestly. However, if I could name a wish, basically I would like to see the ETF rainbow part with a share level of roughly 20 till 30% of my overall portfolio. Yeah, so let's say 70 till 80% single stocks, as you can see here, and 20 till 30% ETFs. That is for me a great balance. Stepping on the finish line, talking about the performance of the past period, as I already mentioned, quite an exceptional period and month, and we're talking about an overall total yield of the past 30 days with 33% up, and therefore finally positive with 18.44% per year since beginning of this year. And as you can see here, compared to the benchmark ACWI, we're definitely in the positive. You never know what will happen. I'm quite confident this will not change too heavily this month anymore. Who knows what will happen in the upcoming year. Of course, my benchmark is way more neutral, has a way lower volatility. If you are a little bit sensitive when we talk about volatility and stock prices and rising and decreasing is not something what you like too much of your portfolio, then maybe just go for an ETF. But for me, volatility, I like it. I like the experience. I like the ride, like a roller coaster. And I like to have emotions, positive and negatives as well. And for me, it's okay if I lose money compared to the benchmark. I'm very happy that's not now the case, at least, as you can see here. However, I found a strategy for myself which I like to follow through, and staying with an aggressive setup, which in very good times just get a lot of tailwind and a strong dynamic. That is something which just fits very well to my personality. But yeah, it depends on you, on your personality and your experience, and on your goals, of course. Okay, going on with the mood, my mood actually. So the title of today's video, epic once in a lifetime performance. For me, I don't hope that's the case. I hope it's not once in a lifetime. I hope I will experience this a few more times in the future. Overall, when we talk about my personal mental level, stressed, relaxed, guys, I'm even a little bit less relaxed than the past period. I took the bar a little bit to the left into the stress direction because, always when something seems too positive, then it's easier to somehow stumble and fall and drop to the floor. Yeah? And of course, then you need to stand up again and look forward. But I'm getting a little bit more careful and sensitive, let's say it like this. However, overall, I'm very positive about the market, about 2024. I've talked about making a separate video about my expectations for 2024, but I can already mention now that for me it's not just about these rumors, will the interest rates dropping earlier than expected or heavier than expected. For me, that's not the case. For me, it's more about what I can see in my personal life. And I see people are spending money and they get used to it. They get used to a higher average interest rate. Yeah. And of course, it's way more difficult to construct a house or whatever. In the past, it was very normal to work with an interest rate of 5% or something like this. It was not so special. And I can imagine that people getting comfortable as well, again, with this kind of level of interest rates, and just think, okay, doesn't make sense to wait now with the budget I have, or the investments, or getting some debt, some leveraging some money or whatever. They just say, okay, it is how it is. 5% is the new 0%, yeah, and they start consuming, start investing, and everything gets back to normal. And to finish this today's investment portfolio update, the outlook, really it was never that relaxed. No investment is planned for this period. I will just wait for Santa, for New Year's Eve, and then create a strategy for the upcoming year. But till then, I'm somehow retiring mentally. It was stressful enough in the past weeks and months. I will not focus too highly on debt redemption, just take a normal level. Currently, I'm leveraging investments of roughly $18,000 US. In the last period, I was on a level, I think, with $44,000 US. So due to the sell of the ETF shares, it looks way better right now. And so for me, the end of the story of today is lean back and relax, and let's see what the past days of this year brings. I hope it's not too shaky and not too much eruption is going on. I don't need more yield, not less yield. I'm happy how it is, and already preparing myself mentally for 2024. Yeah, and guys, so basically that was it of today. So thank you so much for joining the call. If you liked it, give a thumbs up and subscribe to the channel. It always motivates me. And as I mentioned already, join the streams in the upcoming earnings season. I always, here and there, try to drop some other episodes of perspective time. And however, sometimes private life, personal life is a little bit demanding, and I try to find a good balance, and I will find it for sure. I'm working as well on the technical setup. Not sure if the camera is so well this time, but at least I hope the sound is a little bit louder than the last time. If that's the case, please feel free to comment in the comment section under this video. And of course, you can comment anything else if you disliked something, if you liked something. Yeah, and thank you very much for joining again. And I hope you will watch again in the future. Guys, make always your own evaluation and make sure you take your time to invest money before you invest your money. And take care of yourself. Stay healthy, that's the most important. And see you next time.